I'm Steve Nelson. I have the great privilege of serving as the CEO of Capital Insight Partners, and I get to lead this wonderful investment team. I'd like to welcome you to our 2021 Economic and Market Outlook. It's a real joy to have you with us today. We're so sorry that we couldn't do it in person, but with COVID, we thought the best we could do was to record this year's Economic and Market Outlook. So thank you again for joining us. Of course, whenever we talk about the markets and the economy, we talk about the future, we have to consider the risk involved and the risk that we may even get some things wrong. Because this is recorded on video, you're able to pause now and read the disclaimers and read the sections about risk. But let me start this presentation with a mea culpa. Unfortunately, last year at our Economic and Market Outlook, I stood before you in January and said very boldly that there would not be a recession in 2020. And it only took about a month to be proven wrong on that. So clearly when we're talking about the future, it's quite possible that we'll get some of this presentation wrong. But in general, we have a good message to share with you. Certainly as we look back at 2020, the story was very good. In fact, when you look at U.S. stocks performed very, very well. Both the large caps and the small, medium-sized companies did, generally speaking, from January 1st to December 31st quite well, double-digit returns. The same is true in the international stock markets. And in fact, bonds also did well last year. The bond index that you see here was up 7.5%, so it was a good year for bonds as well. The one area of the market that struggled last year was real estate. Of course, with people going home to stay out of the office with coronavirus running across the country and across the world, some parts of the real estate sector really struggled. The shopping malls also struggled. So that's why the real estate index was down. But it's really remarkable that given all of the sadness and the very difficult times that so many people had, that the markets were able to recover as well as they were. And you may ask, why did that happen? In fact, why did we get this V-shaped recovery? Well, the reason we got the V-shaped recovery, I'll share in a moment. But I thought this picture was kind of interesting to compare what happened in 2020 to what happened in some prior similar periods. Recall that the stock market, the S&P 500, fell more than 30%. So if you compare this picture to the GFC, which is the light blue was the 2008-2009 period of time. And if you compare this 2020 downturn, it looks somewhat similar, where we had that sharp drop and then the recovery. Of course, we also have the 1987 and the 1929 crash on there for you to see. So why did we get this V-shaped recovery? Well, very simply, the Federal Reserve Bank came in big and they came in early. And that was really key to supporting the economy and giving investors confidence that things would recover. So you see how the money supply grew almost 35% last year. Well, that was all because the Federal Reserve got involved in the economy and grew the money supply quite deliberately to try and put a floor under the economy and also under the capital markets. It worked very effectively, and the U.S., you can see, was far more aggressive than their European and Japanese counterparts. Now, where does this leave us as we get early into 2021? Well, where it leaves us is in a rebuilding phase. In fact, if you look at the picture here of the business cycle, you can see that the first section, what's called rebuilding, is where the economy is falling, but at a better rate, meaning a smaller rate of decline. And we're getting pretty close to that period, and as an investment team, we're having an active debate about this. We're getting pretty close to that period of time where we may start seeing us enter the green zone, meaning accelerating growth in the economy. For example, when you compare the economy and business earnings per share, when you start comparing March of this year to March of last year, April of 2021 to April of 2020, we should start seeing an acceleration in earnings. So we actually believe we've come through most of that purple section and we're beginning to enter the green zone. We'll come back to this picture in the next module where we talk about 2021. But the good news is the storm has passed as far as the economy and the markets. we certainly acknowledge that a great many people are still struggling mightily in this day and age of coronavirus. So given that 2020 ended up being a good year for the markets, we did want to take a look at something else which is more long-term, something beyond the moment. It's important every so often to go back to investment fundamentals. And here's something very important for any of you that have a 10-year or longer time horizon. So certainly for your children and grandchildren, be sure and share this picture with them. Help them understand what this picture means. So what we're looking at is back in 1976, if you invested $10,000, in black, you see the annual income that that bond investment produced. So in black is the bond investment. And as interest rates have come down over the years, you see how the annual income produced by bonds has also fallen. Today, that original $10,000 investment in 1976 is yielding less than $1,000 a year of income. Conversely, had the person put that $10,000 into the S&P 500, just the dividends alone would have given us much more income and, in fact, rising income through the years. So if you are a long-term investor, this is a strong argument for stocks. There's no guarantee this will continue in the future, but our belief is that most investors should still have a meaningful exposure to stocks because we do believe that this trend will continue. Companies that do well tend to grow their dividends through time, whereas the interest rate on bonds is locked in for the life of the bond. And because we're starting at low interest rates on bonds in today's market, again, we would say this picture from history argues that you should have more money in stocks. One of the great quotes from Kierkegaard that I think really crystallizes how we may get some perspective on last year is that we can only understand life looking backwards, but we must all live life forwards. So in the next module, I'm going to talk about 2021 and a little bit beyond and what we see coming. And then Sarah LeClaire will come later too and talk about longer-term investment themes that our investment team is working on. Do keep in mind that you may have a lot of questions. We covered the year 2020 fairly quickly here, and we certainly invite you to reach out to us. That's my direct phone number. You can also email us and certainly visit our website as well. Thank you again for participating in our 2021 Economic and Market Outlook.